Everyone, here we are with ticker symbol WWR, Westwater Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So one of the things that I've noticed before we jump in here and move the resistance levels and the supports to their new locations is that, yes, Westwater's had a bullish run. It hit a peak up here of about $14, almost reaching $15, and it started to dip. And since the 7th of October, right, the bears have been dominating this, and the bulls tried slightly, right, to break through the 50-day moving average, and quickly again the bears are just showing how they're dominating this chart. And another thing that's very important is that I noticed that we're getting close to one of the support levels here that was formed on one of the levels off as the bullish run was beginning, and that was one of the points before the run continued, and that was up here at 5. Let's see if we can zoom in and get it right here at 538. I'd write that number down. We're literally 40 cents away from that. 538 is an important support level to keep in mind if this was to break through the new support level, because it just broke through the support level, and also it lost control here from even getting close to this resistance and breaking through it. It barely did. It only lasted for 30 minutes. So let's look at our new support and our new resistance levels here so that we can go ahead and see what is important for Monday. So the first thing is the 50-day moving average. The 50-day moving average is 605. I'd write that down. Very important number. If we're below it, we're in bearish territory, and if we're above it, we're in bullish territory. For the bulls to even get back into bullish territory, they need to cross 605. If they cross 605, their next goal is to break through resistance. This is the highest point before this bearish run continued, and that is 636. If the bulls accomplish this, they've accomplished two things. They broke through the 50-day moving average, which gets them back into bullish territory, and they're on their way to break through the first resistance level in bullish territory, and they need to turn 636 into a support. If they can turn this into a support, they can start to break away, hit newer highs, and reach newer resistance levels. So super important for the bulls to break through the 50-day moving average and work their way up to this resistance level and break away from the 50-day moving average in an upward direction to hit newer resistance levels and newer highs. Now, if 636 is accomplished and broken through and turned into a support, then the next resistance level would be 650, and the one after that would be up here at 673. But before worrying about any of those, 636 needs to be broken through and turned into a support. And before even getting close to 636, 605 needs to be broken through by the bulls to get back into bullish territory. Now, on the other hand, we have what the bears want. And again, as I stated earlier, the bears are going to try to want to break through this support to then work their way down to the lowest point that we just talked about earlier in the $5 range, which was 538. They're not that far from it, but before getting anywhere near that, they need to break through this support level, and that is 573. If the bears accomplish breaking through 573, that's moving further away from 605, the 50-day moving average, in a downward direction, and I highly recommend to all investors pay close attention to how this stock is reacting once it breaks through 573, and how quickly is it hitting newer lows, or is it hanging out sideways, giving a chance for the bulls to reappear and try to bring this back up, because the tug of war will be happening within this area. But if this support does get broken through, this could start to see newer lows, pull further away from the 50-day moving average, making it harder for the bulls to reappear and bring this one back up. So put your 1 minute, 5 minute, 15-minute chart and double check the outflow and the inflow of the stock and see who is dominating the chart to go ahead and make a decision, right? A rational decision as an investor. Now, if you're willing to hold and pull through, the next low would be all the way down at 538, as I stated earlier, and that number is right there at that support. But before getting down there, like I stated, the first support level that the bulls don't want to see be crossed and the bears are going to try to break through is 573 to start to hit newer lows and newer support levels. As always, I hope that with these cues, you guys will be well equipped for Monday's trading day. And if you feel encouraged or inclined to subscribe and you're a first time viewer, you're more than welcome to. But don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.